So if I had to rank the 5 best places that I would invest in Queensland at the moment, based purely on capital growth, this would be my actual list. And I can already tell you that some investors are going to disagree with it, because Brisbane isn't number one, Sunshine Coast isn't number one, Brisbane isn't even on my list, and the market I rank as number one isn't the one that you're going to be expecting. So let's dive into the data and see where my top 5 in Queensland actually stack up. As always, before we get into it, anything that we go through in this video is purely factual or general in nature. It doesn't pertain to anybody's specific financial advice. If you are thinking of purchasing property and you're wondering if it's suitable for your financial situation, please speak to a financial services professional about your specific financial situation. If you're looking for specific property advice, I'm more than happy to help you. Just reach out and book in a meeting. So the first area that we're going to go through today is Cairns. Now, Cairns has a very tight vacancy rate at the moment in terms of vacancies. We're looking at 0.8% overall in the region of Cairns in terms of their overall vacancies. Furthermore, you can see that the overall number of property listings has been declining for the longest time. We've only just this month seen an increase in the number of listings, but apart from that, it's been largely declining since early 2020, going from around about 8,000 property listings to just over 3,000 in total. Employment has been declining for that long-term period as well. There's a ton of infrastructure happening in Cairns. You can see in March 2021 where the unemployment peaked at 6.2%. and it fell all the way down to 2.9% as of March 2025. It has increased somewhat. However, it's still fairly close to the national average of 4.3% and the regional Queensland average of 4%. In terms of Cairns' forecasted population growth, they're expecting to grow by 72,000 in 2050. So that being said, they're looking at around about 250,000 people in 25 years' time. Cairns' industry composition is relatively diverse. You can see the majority of occupants are in healthcare and social assistance, followed by accommodation and food, being a main tourism location, retail trade, education and training, construction, public admin, transport, and professional scientific and technical skills, with mining not featuring very highly, or agriculture, forestry, and fishing. The number of days on the market has been declining for Cairns over the last 12 months, falling to around about 30 days, and rents have been climbing over the last 12 months, roughly 6% on the median rental price, and 20% over the last 3 years. Rental yields have seen a fall of 8%, or 0.44% on the actual rental yield for houses, dropping them down to 4.6%. And this is largely because capital growth has exceeded rental growth on these properties. So you can see, especially over the last 12 months, that rental yields have had a significant decline. The number of DA approvals has somewhat had a downward trend from 2021 onwards. Overall, it's had a slight uplift over the last 12 to 18 months there. And you can see the year-on-year fall in development application approvals here. The next location I'd consider in my top 5 is the Gold Coast. Gold Coast has seen vacancy rates stay somewhat stable at around about 1.2%, showing little signs of variation that they've seen in the past. Over the last month or so, vacancy rates have crept up slightly to 1.8% though. So keep a close eye on that trend. Listing numbers are largely down from their peaks in 2019 and 2011. Nowadays, we're only seeing just over 6,000 property listings on average. Gold Coast unemployment rate has vastly declined, especially over COVID, where unemployment rates were close to 7%, falling in 2023 to below 3%, and now hovering at around about the 3.2% mark. Similar for the Gold Coast, the overall number of industries is relatively diverse, construction being 18.5%, followed by rental, hiring, and real estate, professional, scientific, and technical services, healthcare, transport, postal, and warehousing making up the top 5 or 6 there. And you can see agriculture, forestry, and fishing not really featuring, and mining being an overwhelming minority at 0.2%. Over the last 12 months or so, the number of days on market has declined from around 37-38 days to 32 days. And rents in the Gold Coast have been growing by about 8% over the last 12 months and 22% over the last few years. Median rents are around about $950 at the moment in Gold, and rental yield on houses is roughly 3.53%. However, they haven't compressed that much over the last 12 months, only 0.25% off the overall rental yield, showing that rents have somewhat kept pace with capital growth. somewhat slightly behind. Unit approvals have actually exceeded house approvals in the Gold Coast. You can see a decline in the number of housing approvals and an increase in the number of unit approvals. Gold Coast population is looking to grow from around 647,000 to hit 1 million by the year 2050. Employment growth has been substantial over the last 12 to 24 months, growing from around about 250,000 up to about 270,000, from around about 250,000 up to about 285,000. Unemployment has dropped from around 9% in 2021 all the way down to 4.8%, which isn't too far from the national Australian average. The industries are fairly economically diverse. Main is construction, 23%, professional, scientific and technical services, transport, postal and warehousing, rental, hiring and real estate, healthcare and socials make up the top 5 industries there, with agriculture, forestry and fishing, and mining being again very negligible. Overall, there's been a sharp decline in the number of days on market over the last 12 months, dropping 5 days, and then over the last 3 months, dropping 3 days. You can see the decline in the number of days on market. We're looking at around about 2 days on market at the moment. Rents have increased 1.5% over the last 3 months and 6.35% over the last 12, showing good signs of rental growth in line with the national Australian average, especially over the last 12 months. However, rental yields haven't been keeping pace, showing a rental yield decline of 9.5% or 0.37 off the headline rate over the last 12 months. And you can see the decline in rental yields over the last few years, falling from over 5% down to under 4%. The number of development application approvals has been relatively consistent, albeit somewhat of a dip in 2023. Largely, we've been around the 4,000 DA approvals per annum. And Moreton Bay's population is expected to grow from 479,000 to 690,000 over the next 15 years, meaning an additional 210,000 residents over the next 15 years. Next up is Sunshine Coast. Sunshine Coast's vacancy rate has dropped, virtually halved over the long-term period, normally having a vacancy rate in the 2% mark. Since the end of COVID, vacancy rates have dropped all the way to around about 0.5% and slowly increased to 1% over the last few years. At the moment, we're seeing vacancy rates of 1.1% in the Sunshine Coast. Stock on the market has been declining for the longest period in Sunshine Coast, falling from about 12,500 dwellings all the way down to just over 5,500 dwellings over the last 15 years. Employment in the Sunshine Coast has been growing fairly steady, sitting at around about 196,000 jobs at the moment. And unemployment has been declining since the end of around about 2021, declining from over 6% to around about 3.4% where it currently sits as of December 2025. The biggest industry in Sunshine Coast is construction, followed by professional, scientific and technical, rental, hire and real estate, healthcare and social assistance, and retail trade making up the top 5. So a fairly diverse economic industry. A little bit of agriculture in Sunshine Coast, forestry and fishing at 3.2%. However, mining again being negligible at 0.2%. Days on market has been falling for Sunshine Coast. It's a week shorter 12 months ago and 3 days shorter over the last 3 months, showing that the number of days on market has been accelerating in its decline. Rents have been increasing in the Sunshine Coast. Over the last quarter, they've increased 2.5%, and over the last 12 months, they're up 7.89%, showing a bit of an acceleration. When we look over a 5-year change, roughly 10%, 3-year change, 17%, showing that's just under 6% year on year, close to 8% over the last 12 months. And then if we annualize this quarterly figure, we're getting close to 10%. Over the last 3 months, rental yields have declined only slightly by 0.04%. Over the last 12 months, they've declined by 0.9%, showing an overall decline of 5.39, meaning again that rental yields are being outpaced by capital growth in the area. Development application approvals have been declining, peaking in 2021 and declining all the way down to around about 2,500 in 2025. In Sunshine Coast, the population is projected to grow from 346,000 people in June 2021 by another 200,000 additional people, reaching 540,000 residents by the year 2046. The next area is Bundaberg in far north Queensland. Employment has climbed to around about 55,000 people, and unemployment has declined all the way down to 4.5%. Agriculture, forestry and fishing in Bundaberg is the biggest employer, followed by construction, rental, hiring and real estate, healthcare and social assistance, assistance, and professional scientific and technical services, where mining makes up 0.5% of the overall economic industries. Days on market has fallen by 3 days over the last 3 months and 6 days over the last 12 months, showing a steady decline over the period. And rents have been increasing, albeit by roughly the Australian national average of around 5-6% over the last 12 months and only 1.67% over the last 3 months, showing that it's been renting out relatively consistently. However, the overall rental yield has been out by capital growth. We can see a rental yield decline of 0.5% over the last 12 months or 0.16 over the last 3 months. DA approvals have increased over the last 12 months, showing more than 1,000 development application approvals in 2025 and a steady increase over the last 7 or 8 years. Vacancy rates in Bundaberg have been relatively low, with a steady increase from around about 0.5% to 1.2% in May 2026. Bundaberg currently has a population of around about 100,000 people, and it's due to surpass 142,000 by the year 2040, even if the population grows by around about 1% year on year. So in terms of my top 5, I'd probably rank Gold Coast as number 5. I think Gold Coast is a little bit late in the cycle, but there's still some capital growth to be had. The Olympics ultimately is going to be providing some long-term infrastructure, but when I'm looking at future capital growth potential, I think there's a lot of money that's already been made. Sunshine Coast is my number 2. It's a really close call between Sunshine Coast and Cairns. These are my 2 favorite markets right now. Sunshine Coast continues to benefit from population growth, lifestyle migration, and strong infrastructure investment. And the only reason I've ranked it as number 2 is only because of affordability. Typically, only people from high income areas like Brisbane, Sydney, and Melbourne are likely to migrate to more affordable in comparison areas like the Sunshine Coast. So that's probably one of the only reasons why I've ranked it as number 2. Bundaberg I'd rank as number 4. It doesn't get talked about as much, and there has been some strong capital growth here previously. Housing still remains relatively affordable compared to a lot of other Queensland markets, and more importantly, affordability continues to attract owner-occupiers and investors. The reason I've placed it 4th rather than higher is the historical growth has been a little less consistent, and it's a little bit more reliant on agriculture as well. Number 4, I'd rank Moreton Bay. It's a great Southeast Queensland corridor, but there's more supply risk in comparison to the other markets that are above it. And last but not least is Cairns. For me, it's the best balance of affordability, tight rental market, population growth, and plenty of upside potential. Thanks everybody for watching. I hope you've taken something away from this video. Please don't hesitate to reach out if you do have any questions. Apart from that, don't forget to like and subscribe, and I'll see you in the next video.